My name's Steve Jagger. The company is called Addy. At Addy, we are focused on investing together. Obviously, a quick disclosure or disclaimer, we can't give any investment advice for any of the properties that we bring onto our platform. You should seek a professional for any feedback or thoughts on what you should be doing in your personal situation. Like I said, my name is Steve Jagger. I'm one of the co-founders of Addy. Addy is an online investment platform that allows everyone to invest in real estate for as little as $1. The mission of the company is to enable every human to be a homeowner. We have chosen that wording very specifically, knowing that it's a bit provocative with the word homeowner. We just think that the term homeowner and the definition of it is a little bit broken and a bit old school. And the way it's going and what the future looks like is going to be a different structure for how home ownership works. So there's a picture of myself and Mike. That was actually last year. We're about 2 days from our 21st anniversary of being business partners together. We've built 6 different companies across the last 21 years in 3 different countries, from incorporating company in Vancouver to the Philippines to Singapore. We have had a lot of experience in a whole bunch of different aspects of business, but most specifically in the technology space. To give you a bit of background, real estate investing is for the wealthy. I think part of what we just heard, minimum dollar amounts, all these things that make it very difficult for young people to be able to get into the real estate market. And where Addy kind of came, sort of the genesis of what Addy is my business partner and I have been personally investing in real estate for the last 20 years. So we've had a little bit of success. We've sold a couple of our companies, and we've personally taken some of that money and invested it in real estate. And probably any real estate you invested in Vancouver 20 years ago, you've probably done just fine if you held on to it long enough. And one of the things that we had done is, over time, we've been investing in real estate, and from different properties to our own personal homes to condos or rental properties. And when we moved back we were living in Southeast Asia, I moved back about 2016. In 2017, an opportunity came Mike's way, actually, to invest behind a developer here in Vancouver. So the developer was taking a handful of houses along Oak Street, basically rip down those houses and build a whole bunch of townhouses. And the developer was taking in limited partner investors. And that developer had approached Mike and said, "Hey, are you interested in investing in my development?" Mike went through the information and the numbers, liked what it looked like, and said, "Yes, I'm interested." The problem was the developer said the minimum check size was $1 million. And Mike asked if it was possible if he could set up a new corporation, put a few friends' money into that new corporation, and then make that $1 million investment. And the developer said, "Yes, that's fine, as long as I only have one investor to deal with." So what Mike did was text me and a handful of other people asking if you were interested in the opportunity. We dug through the information and said yes, and a handful of people said yes. And long story short, the opportunity was essentially sold out in about 48 hours. But one of our employees at our old company, Payroll Hero, wanted to participate, and he had $10,000 that he wanted to invest. And so the developer said the minimum check size was $1 million. Mike had actually said the minimum check into the syndicate was going to be $50,000. And when this employee asked if he could participate with $10,000, Mike was obviously gutted because he knew the answer was going to be no. And so the employee didn't actually take that lying down. He sort of argued about it. He's like, "Well, how am I supposed to invest in real estate if nobody lets me invest in real estate? Like, $10,000 is a lot of money. Why can't I participate?" And it was this early conversation that got us working through and thinking about, well, what are the reasons that small investors, why do developers have minimum check size? Why do syndicates have minimum check size? And the reason is there's lots of costs involved in taking a check. A $10,000 check or a $100,000 check costs the same amount to process that money, process that investor, to manage the investor, to do property updates, to push a distribution. All that kind of stuff costs time and money. And so that's why these minimums are there, is to have a smaller group of investors to keep costs in line. And so that early conversation is really what brought us to coming to the conclusion that we could probably use technology to solve this issue, right? And if you look at today, like this slide says, real estate investing is for the wealthy. It is very true. Your average condo, especially in cities like Vancouver and Toronto, starter condos, $500,000, right? It's very difficult for people to get into the real estate market to own a slice or own a piece or a property for themselves. And it's just getting worse with government printing money, making the value of the dollar worth less, pushing assets up. The stress tests, all these things are not helping the situation, and so that's where Addy steps in. So we're essentially democratizing access to the real estate asset class, and we're using technology to do that. And so we've built a whole bunch of technology and a whole bunch of software to drive all of these costs down, so that we can take small investors for as little as $1. So the 4 promises that we've put together for Addy, this is sort of what we are all about. The first one there is absolute accessibility. And so this is why we do the minimum investment amount as little as $1. It's not because it's a marketing gimmick or something. The goal is truly to eliminate barriers to entry. And so if we said it was minimum $500 or minimum $1,000, and you have $400, all of a sudden we are the barrier to entry that we're trying to eliminate. So by us putting it down to $1, it gives our community the ability to choose how much they would like to invest. Is it $10? Is it $500? Whatever their amount that works for them. They can invest from $1 up to $1,500 per property, but it's totally their choice as to how much they choose to invest. The next one is hands-off home ownership. These are we essentially give them the ability to invest in these properties, but they don't have to do any of the landlording behind the property. It is all handled for them. So they can be a passive investor in the property while having a pari passu slice of the equity with us. The next one is expert co-owners. So this is all to do with the people that are running the property. The general partner in charge of the property is an expert in managing that property type, that building, that location, and has experience to do so. So you're not partnering necessarily with someone who doesn't have the skill set. You're partnering truly with someone who knows what they're doing, can handle the asset, and can effectively run it. And then the last one is tangible investing. And this is the big one that makes us different from a REIT. With us, you are choosing to invest into a specific property, a specific address, a building that you can drive by, you can see. You're not investing in a basket of properties. It is truly a specific property that you either choose, yes, you're going to invest in it, or no, you are not. There's no bulk group or fund or e-REIT or anything like that. It is truly a specific property, and you make a specific investment decision behind that one property. So what we do, we'll take a property, we take an equity slice in that property, and we cut our equity slice into $1 increments. So let's say we have a $500,000, $1 million equity slice. We would cut that, let's say it's 500,000, we would cut that into 500,000 $1 increments. And then our community can choose to invest in one of those $1 increments, 10, 15, 20, whatever it is. And so how we set this up, every property, we set up a new sub corporation that owns the equity slice in that property. So when you're investing, you're essentially buying shares into a sub corporation, and that sub corporation stands on its own and is able to, and it owns that equity piece within the property. There's 2 ways you make money, as they were just referring to earlier. There's the distributions that come out of a property, can be monthly, can be quarterly, can be annually. And then there's the liquidation event when you sell off the property and you've got your capital gain. Some of our properties have both. Some of them don't have distributions at all. It really depends on the type of property that is coming onto the platform, so that and people can choose what they are looking for. So the way we make this all happen is we've built an online platform to do this. So Addy members can not only create an account on our platform, they can move money into their Addy wallets. They sign the documents digitally to make their investment. They can store money in their wallet. They can move money back and forth between their Canadian bank account. When a distribution happens, it happens within a couple minutes and the click of a button from our end. The distribution shows up into your Addy wallet. We cut the distributions down to the 8th decimal place to ensure that our smallest investors are not having anything rounded down from them. It is done as fairly and transparently as possible, so that every investor, no matter how big or how small, has their equal slice of ownership of that specific property. And so all of this technology, from creating an account, moving money into your wallet, to signing legal documents, reviewing the due diligence, to receiving distributions, to doing withdrawals or adding funds into your wallet, is all done and built through the software that we have, that we've built. And then, of course, there's the whole backside of the software that does all of the reporting we need to do for securities commission, spitting out T5 slips for tax time. All of that stuff has been built into the platform and automated. When it comes to owning a property, it is truly a quick process where you follow these steps, create your account, go through the KYC process, review documentation, and purchase and sign all digitally, all through your account on your phone or on your computer. So the big thing I think that makes Addy different is we don't charge any fees. There's absolutely no fees built into our business model. We don't charge an acquisition fee. There's no lift on the property. There's no transaction fees. There is no mortgage guarantee fee. There's nothing. Generally with real estate syndicates and from other general partners, there's fees built into all of this stuff. If you look at any REIT and how they make money, there's fees all over the place. With the Addy model, we don't charge any fee at all. All we charge is a membership model. And so the people that choose to join Addy pay a $25 a year to be a member on the platform, and that gives them access to all of the investments that we bring onto our platform. So it's just $25 a year. That is the only way to pay us to do all of the things that we are doing. So we are truly trying to eliminate barriers to entry to make real estate investing accessible to everyone. And so right now we can accept investors from British Columbia, Alberta, and Ontario over the age of majority. So 19 years old in BC and 18 in Alberta and Ontario. And maybe what I'll do is I'll just quickly switch screens here. And I want to show you a couple of the properties that we have done in the past. So maybe I'll start at the beginning. So when we first got started, when we had that initial conversation with that first employee that wanted to invest $10,000, and we decided, let's do this. We think we can, understand how these costs work and understand how we can eliminate them. So we set out with a proof of concept property. We wanted to figure out and prove, is this a thing? Do people actually want to do this? Do they want to invest small dollar amounts into a specific property? So we set out to prove that. And so we bought this single family house on the east side of Vancouver with the goal of figuring out, do random Canadians off the internet want to invest small dollar amounts into a specific property? And as you can probably tell, the overwhelming response was yes. We have 305 investors in that one specific property, which proves to us that yes, people do want to do this type of investing. I think it's important to note that that was the first property we ever did, which was a single family house, but we don't have any immediate plans to come back down into the single family market. It was more done so we could, just understand if people would be interested in doing that type of investing. The next property we brought onto the platform was a single commercial building, a brand new building, actually out in Chilliwack, British Columbia. This was built for Starbucks Canada, has a drive-through. And it's a single tenanted commercial building. That one we put onto the platform. We have 833 investors in that property. Interestingly, about 63 of them live in Chilliwack. So they were able to buy into and own a slice of a property that's right in their community. Generally, properties like this trade between high net worth individuals, and most people don't even know that it was bought or sold. And so with us, we're able to take the community and enable them to be an owner of this property. This one actually does quarterly distribution. So when the system spits out a distribution, in this case for the Chilliwack Starbucks, it goes to 833 investors, and they're getting those distributions 4 times a year. And I'll circle back to some neat things on the Chilliwack property in a minute. The next one we brought on was a Toronto property. This one went super fast. It was sold out in 78 hours. It was a very quick property. It's a big multifamily complex in Toronto. After that, we brought on a Calgary commercial business park on the northeast side of Calgary. I believe it's 11 buildings. This one we have 1,141 investors in. Also, we've got a neat story about the distribution out of this one. So this one was meant to do annual distributions. And so the general partner decided to switch it to quarterly distributions within the first quarter of everybody investing. They changed their mind. The property was performing well, and they switched it to quarterly distributions. So we were able to do a surprise distribution to all of these investors who were expecting their first distribution months and months away. And we were able to surprise them. And so I've got a couple of videos I can direct you to so you can see how we handle that. Then we did a apartment building in North Vancouver. This one we have 1,550 investors in. This one's a neat one in that it's a 22-unit apartment building, but interestingly, some of the renters in the building chose to buy into the building. And this is why I talk about redefining the term home ownership. And what does it mean to be a homeowner? Can a renter who's got a rental contract in one of these units in this building also buy a piece of the building through us? Does that not change the game of what it means to be, whether the renter hat on or the owner hat on? We're able to enable renters to own a slice of the property that they are renting in. It's a truly a game changer for how this works. This property is expected to do annual distributions. So when those investors get their distributions out of this property, the ones that live in it are essentially getting the distribution back from their rent, which I think is kind of neat. The next one after that, we did a Toronto property. It has over 1,300 investors in it. Again, it's a big multifamily complex in Don Mills in Toronto. And then we just sold out last Friday, or 2 Fridays ago now, we did this building downtown Vancouver on Granville Street called The Lex. It's a 45-unit mixed-use building, so 45 apartments upstairs and 2 commercial units with a subway and a nail salon on the main floor. The neat thing about this one is it's already a stratified building, so all the units are already stratified. So there's some neat things that might happen with that property. So the asset value of all these buildings is $154 million. What we are about to do is the next one coming is this Kimbrook property in Kimberley, BC. This is the smallest community we've ever gone into. This is a 57-unit apartment building in Kimberley, and interestingly, for this one, it's the largest building in all of Kimberley. This one is actually we've let Kimberley residents into it first right now. They're able to get into it today, and then the property will launch for everybody else shortly. But we wanted to find a way to enable the small community of Kimberley to be able to invest in the property in advance of everybody else, try and enable them to own a slice of this big property that's in their community. So those are the properties that have come onto the platform. You can expect to see a lot more coming. There'll be another 15 or so that'll come this year. Every couple of weeks, a new property drops onto the platform. They will range from commercial to mixed use, multifamily, industrial, to developments. They will range from across, where they are across the country. And so when you go to our website, you can always just click on investments. If you just go to addyinvest.com, you can click on investments and you can see these past properties. If you click into any of them, it will pop open the landing page so you can dig into the specifics of that property. And so you can see here, this is the Calgary one. It has an 11.7% expected IRR. You can see all of these, all the different properties that are that have come onto the platform and what their expected IRR was. And you can see how they range. This one's 10, the other one was 5 or 4. This one's 5. The Kimberley one, I think, is 13. Yeah, 13.5. And then the last thing I wanted to show you is if you take a moment and have a look at our blog, I think we do some fun things in the blog where we've shot a bunch of interesting videos. The one that we did that I was referring to the other day or earlier was the surprise distribution we did for the Calgary Business Park. So this building's called the Park at Willow Glen. Some of our team was out there a few weeks ago, actually flying into Calgary to get to Kimberley to do the due diligence on the Kimberley property. So they stopped at the Calgary property and shot some video. And one of the videos they shot was basically announcing this surprise distribution that was coming to those 1,141 investors. And so when we put out the video, it breaks down exactly what's going on. It breaks down what the $1,500 investment, what that person would get on the return. We talk about how the distribution is calculated. We talk about why we go down to the 8th decimal place so that we are protecting the smallest investors' returns. And then, of course, what they can do with their distribution. Another one I would direct your attention to, if you want to watch these videos, they're fun, I think, to check out. The other one was for the Chilliwack distribution that we did from the Chilliwack property. That one we had our CFO shoot the video and share his screen when doing it. And that one you can see the distribution. It was actually the first distribution we'd ever done on our platform. And so you can see this one here, it talks about distribution day. And so when you watch this video with Sean here, he actually shares his screen so you can see him clicking literally one button to distribute the funds that came in for the distribution, distributing it automatically through our platform to 833 people. And you can see the system just bouncing through it in just a couple minutes, where it does all the work, but which normally be done very, very manually. It's all been done automatically through the platform, and so that the investor can see it on their side as well instantly. Once the distribution is done, an email goes out, they see it in their account. It is all there for people to review the details. So that's kind of the overview of what we are doing at Addy. Like I said, the big picture for where we're going is you will see a lot more properties coming onto the platform a lot faster. The Kimberley one will launch, or is kind of soft launched to the community now, but you will be able to invest in that. If you create an account and wanted to invest in that one today, you can. Process, they upload their ID. The ID needs to match the details on their account. They have to verify their email, but it's quite a streamlined process for people to be able to onboard themselves into the platform. Thanks for having me. Hopefully, if you guys are interested, you can create an account. Just go to addyinvest.com and you can invest alongside us.